Hi, welcome to the Market Alert for Wednesday the 7th of June 2017. So yesterday, starting off with the British pound, we see the markets trading sideways initially. I'm just going to fast forward through this. Very quiet, as I said yesterday, that the market's waiting for the UK election, which is out tomorrow, is taking place tomorrow. And then we'll see how the market reacts thereafter. At the moment, it's neck and neck according to the poll, so it's going to be interesting. So we see the market fill this sell here. And the problem with the sell side at the moment is the US dollar is falling. And I'm going to show you that in just a second. Which means that any move to the downside, which you will have seen yesterday, you can see how much it trails sideways. And there you see the market drive through, and on the table there 39 points. Market's driven through, so there's a possibility of trailing. So that's what I did. You'll see the stop come into place there, which is just by the scalp. But unfortunately, what I didn't notice at the time was that we had a lot of buying coming into the market here as prices reversed and moved higher. So this would have been an ideal place to exit, along with, as I'm going to show you now. Let me just finish this off so you can see the market coming back. And there you go, stopped at the scalp. Now the reason the pound won't go down is because since Trump came into office, this is the dollar index, by the way. This is a basket of currencies against the US dollar. And you will notice that from Trump's inauguration, prices, or the US dollar, has been moving down, which is another reason why the pound is bullish, and will be even more bullish if May gets back in tomorrow. If not, we'll see a bit of a switch initially. But you can see there's a defined downtrend in the US dollar, and that's why, if I just release the screen, you saw the market here move down sharply, and then the market brought back. So the ideal thing in hindsight, which is always a great thing, was to get out when we had the market moving sharply lower there, because of the backdrop. If you know the backdrop of the market, it makes it a lot easier to actually read. Then on to the Dow, the market putting in a buy signal. As I said, Tuesdays are quiet. If you get profits in the first hour, you take them. We've got about a 60-point range in this market here for Tuesday, which is about average, and then the market goes sideways. Now you've already had profits on the pound, and you had a winner in the Dow, which is being quiet for the obvious reason that next week we've got the FOMC meeting, live quarterly meeting on whether Yellen's going to raise interest rates or not as well, which is adding to the sort of the sideways bit. Then we've got the UK election on top of that as well. As the UK is the financial centre of the world, obviously the market's waiting to see if Corbyn gets in, and then there'll be all sorts of fireworks if he does on the financial markets, because of the proposals and also the other rules and regulations that he wants to bring in. And of course he doesn't like the financial markets anyway, so it will be interesting to see. So that's another reason why the markets are quiet. And then you can see there, you know, there's no chance after the first hour when the market's waiting, and that's why I sent out a note, and that's why I keep saying in the Market Alert, if you have profits on the first trade, then stand aside. And you'll see that the market then just traded for the rest of the session in a sideways move until we get towards the close. Now just another thing, this chart is an ETX chart, because a lot of traders use ETX. We've also moved on to core spreads as well, and I'm told that the signals aren't the same. Spent most of yesterday looking at and working out why, and I have a solution, and I'm going to record a video for that where it brings them into line. So I'll release that later today as well for you, so that we have a consistent picture. Whether I use ETX or core spreads in the Market Alert, it doesn't matter. We should have more or less the same. You can't guarantee it 100%, because IG, GKFX, all of the other spread betting companies, they create their own algorithms, their own size of the spreads, and of course that makes it very difficult to actually create a consistency across many platforms, because you don't have any control over the algorithms that they used initially. So I've got a solution for this one though, which, like I say, I'll record and send out later. So let's have a look at the Dow on the overnight and see what's happening. Just before we look at the Dow, let's have a quick look at the pound, and you can see here that the market's starting to trend up still. The backdrop is that the market is in an uptrend, and again this goes back to March, but if we wind back you can see that the market, there is a long-term trend here that goes back to January, which you'd expect as the dollar has moved lower. So the pound there, let me just reset this, there you go. So the pound there attempting to move higher, but again waiting for the UK election tomorrow, and again heed the warning, expect the market to be quiet once again today, day before the UK elections. So in the Dow we can see that prices are once again being held. Let's drag this across. You can also see that we had an increase in the volume yesterday as they brought the market off the lows, the market attempting to move higher. What I would do here is just go from the recent high down to the recent low and have a look and see where the market's likely to find some resistance. And there will be some resistance at 21,201, which again you would expect because it's close to the psychological level of 21,200. News wise, what have we got? Not an awful lot today, just the usual crude oil out later on today, and then for the pound this morning we've just got the Halifax house price index that to show a slight decline in UK house prices there. And on the implied volatility, we have an interesting picture here. We're starting to see an increase in the implied up to 888 from 856. We need to see this move up to around the sort of 10% area would be ideal to get those trades that are going through the scalp. At the moment, again, as I said earlier, I don't want to risk repeating myself, but you know the FOMC election da-di-da-di-da, so remain deadly calm because this is going to change soon. That's why once you get these lows in the implied, also notice that these the increase in the implied volatility is also indicating that you know, there's a lot of uncertainty around now, and they're starting to mark the premiums up on the options as well. Okay, that's it for today. Like I say, keep in mind things are likely to be quiet, and you may be better off just paper trading and just watching the market because of how narrow the range is, because obviously it's waiting for the outcome of the UK elections and also the Fed next week. So just something to keep in mind. There are trades, but we could do with the volatility kicking up a bit, so just to be on the safe side there. Right, that's it. If there's something to report, I will do. Other than that, thanks for watching. See you in the next one.